All right, so are Dividend Kings really as invincible as everyone says? Especially with the markets being so crazy these days. Can they really weather any storm?
Well, that's exactly what we're going to be exploring today.
You're diving deep into their history. We're going to check out how they handled past crashes, and we'll see if they can really handle whatever's coming next.
Yeah, a fascinating topic and definitely a timely one.
For sure.
We're going to be examining this source called Dividend Kings, Market Crash Resilience, and Historical Performance.
Yeah.
And we're going to see how these companies, with their, crazy 50-plus year track record of consecutive dividend increases, how they've handled, market crashes in the past, and if they're ready for what's next.
50 years. That's incredible.
Yeah.
What does that even tell us about these companies?
Well, it says a lot about their financial stability, I think, and also their approach. These aren't like your high-flying tech startups trying to grow super fast. Dividend Kings are usually established players in those mature industries, and their focus is on steady and reliable earnings.
So they're not like the newcomers. They're more like the veterans of the market. But what makes them so resilient during crashes?
One key factor is their commitment to having these insanely strong balance sheets.
Okay.
And it's not just low debt. It's about managing their finances in a strategic way. They want to make sure that they have a lot of cash on hand.
Right.
And this allows them not just to survive economic downturns, it means they can actually seize opportunities that come up in those times of volatility.
Interesting.
Yeah, like in 2008 when we had that financial crisis, a lot of companies were just, struggling to stay afloat.
Right.
But some Dividend Kings actually used their strong financial position to buy competitors who were in a weaker spot. And this let them, solidify their market share, and they actually emerged even stronger after the crisis was over.
That's a power move.
Yeah.
So it's like they have this financial fortress. Not only do they survive, but they thrive when other companies are struggling.
Exactly. It's exactly like that. And speaking of 2008, I think that was a defining moment for a lot of companies.
Oh, for sure.
I mean, the S&P 500 absolutely tanked. It dropped almost 57%.
Yeah, it was crazy.
Sending shockwaves through the whole global economy.
Oh, yeah. So what happened to the Dividend Kings when all that was happening? When the market went into free fall?
Well, their stock prices weren't totally immune to the downturn.
Sure.
But what's really interesting is that most of them either maintained or even increased their dividends during that crazy time.
Oh, wow.
Yeah.
That's pretty surprising. You would think during a crisis, companies would be trying to save cash, not pay out more to shareholders.
Yeah, it might seem kind of counterintuitive.
Yeah.
But it really shows their commitment to rewarding their shareholders, and it shows how confident they are in their long-term prospects.
Yeah.
Like Procter Gamble, for example.
Okay.
To 2008, right at the height of the crisis, they increased their dividend by 14%.
Wow. Talk about confidence. They were basically saying, we got this.
Exactly. Exactly. And they weren't the only ones. Johnson & Johnson also had a modest dividend increase that year, too.
Yeah.
So they weren't just surviving. They were using it as a chance to get even stronger in the market.
So they weren't just weathering the storm. They were using their strength to be strategic. Fascinating. Okay, but what about the dot-com bubble burst in the early 2000s? That was a very different type of crash.
Yeah, it was. That one was mostly focused on the tech sector, which most Dividend Kings aren't a part of. So while the NASDAQ, which has a lot of tech stocks, plummeted almost 78%,
Wow.
Dividend Kings, especially those in consumer staples and healthcare, stayed relatively stable.
That makes sense. People always need things like food, medicine, household goods, no matter what's going on with tech.
Exactly. This just shows you another part of the Dividend Kings' resilience. They focus on those defensive business models.
Okay.
They operate in sectors that aren't as affected by economic downturns. Think about it. Even during a recession, people still need toothpaste, laundry detergent, healthcare.
Yeah, true.
These sectors just provide a level of stability that's super valuable when the market is uncertain.
So it's not just about individual strength. It's about being in the right sector at the right time. It's like this built-in diversification in the Dividend King category that adds another layer of protection.
Absolutely. And it's not just across sectors. A lot of these companies actually have diversified revenue streams within their own businesses, too. Like 3M, for instance.
Right.
They have a ton of products. I mean, they're in everything, from consumer goods to healthcare to industrial stuff. That diversification helps to reduce risk, and it just makes sure their earnings are more consistent.
Yeah, that's a good point. It's like they're not putting all their eggs in one basket.
So we've talked about 2008, the financial crisis, and the dot-com bubble, both huge events. What about more recent events like the COVID crash? How'd they do then?
That was a different kind of challenge.
Yeah.
COVID was sudden and severe. The S&P 500 dropped over 30% in just weeks as the pandemic hit.
Yeah, it felt like the world changed overnight. Everything was uncertain.
It really was unprecedented, but even then, a lot of Dividend Kings held strong.
They kept increasing their dividends, which just proves how reliable they are, even when the world is uncertain.
So it's like they can adapt and keep moving forward no matter what they face. Is there something specific that gives them this consistency?
Well, there are a few factors. In addition to their strong balance sheets and those defensive business models we talked about, they also tend to have this culture of prudence and long-term thinking.
Okay.
So they aren't really focused on short-term gains or chasing trends.
They're not sprinters, they're marathon runners.
Exactly. They're playing the long game. They want to build sustainable businesses that can create consistent cash flow for decades. And this long-term view is reflected in their dividend policies.
Got it.
They know it's important to reward their shareholders consistently, even during the hard times.
It's like they're saying we're in this together through good times and bad times.
Yeah, exactly. And it's a key part of who they are. And it's not just paying dividends, it's about increasing them every year. That consistency just sends a strong message to the market. They're confident they can keep making value long term.
They're not just about survival, they're about thriving long term. They're in it to win it, but in a sustainable, responsible way.
Exactly. And that's really what sets Dividend Kings apart. They don't want quick wins. They're building legacies.
Okay, so we've seen how Dividend Kings have handled past crashes. They're resilient, they're committed to their investors. But what about today's market? I mean, we've got inflation, rising interest rates, geopolitical tensions. How do those things affect the outlook for Dividend Kings?
Yeah, you're right. The market today looks a lot different than the past.
It does.
There's a lot going on, and we need to understand how it all might impact Dividend Kings. So let's start with inflation.
Okay, inflation. Prices are going up everywhere. How is that going to affect Dividend Kings? Especially when it comes to those dividend increases.
That's the big question, isn't it?
Yeah.
When prices go up, it puts a squeeze on profits.
Right.
So it's harder to make the money you need to keep increasing those dividends. And inflation hits different sectors in different ways. Consumer staples, for example,
Right.
which a lot of Dividend Kings are in. Well, they might struggle if they can't raise prices for customers.
Right.
People still need toothpaste and laundry detergent,
Yeah, of course.
but they're going to be watching their wallets more closely when prices are going up.
So Dividend Kings in those sectors, they might need to be a little bit more creative to make sure they can keep those dividends going. What about rising interest rates? What's that all about?
Well, rising interest rates can be both good and bad for Dividend Kings.
Okay.
On the one hand, when rates go up, their dividends don't look as good compared to things like bonds.
Gotcha.
Investors might move their money to bonds because they think they'll get a better return with less risk.
So it's like a competition for investors' money. Dividend Kings have to make it worth their while.
Exactly. But here's the thing. Dividend Kings, especially those with those strong balance sheets we talked about,
Right.
they might actually do better when rates go up in other ways because they don't rely on borrowing as much. They don't get hit as hard by the rising cost of debt,
Okay.
and they can actually earn more interest on their cash.
So it's kind of a mixed bag. Some might feel the pinch while others might actually do well. It really means you got to look at each company individually. You can't just rely on the Dividend King label.
Yeah, absolutely. You have to do your homework,
Right.
look at their finances, their debt, how well they manage costs, their overall plan for handling inflation.
So you really got to do your due diligence in this market.
You really do. And then there's the whole geopolitical situation. It just adds another layer of complexity and uncertainty.
It feels like there's always something happening somewhere in the world that can shake things up.
Yeah, that's just how it is. We live in a global economy, and these global events can disrupt supply chains, mess with economic stability, and make the markets more volatile.
Right.
And that can affect any company, Dividend King or not.
So even with their track record, they're not completely immune to these global events.
That's right. No investment is ever completely risk-free. But that's what's so interesting about Dividend Kings and how they've handled market crashes in the past. It gives us a way to think about how they might perform now with all these new challenges.
So we can use the past to help us figure out the present.
Exactly. We can look at how they've dealt with tough times before, like high inflation, rising rates, geopolitical uncertainty, and we can see how their strengths, those things that have made them successful for so long, might work out now.
It's like a roadmap, but for the market, not for driving.
Exactly. And the roadmap doesn't guarantee anything,
Of course.
but it can help us make smarter decisions.
So even with all this uncertainty, we're not totally lost. We have history, we have tools, and we have knowledge to help us understand it all.
That's exactly what this deep dive is all about, giving you the power to make good decisions for your financial future.
I like it. So we've looked at the challenges and the opportunities in today's market. But the big question is, are Dividend Kings still a safe bet in all this turmoil?
Well, they have a history of resilience, that's for sure.
Yeah.
But we can't just assume that because it worked before it'll work again.
Right. We can't just blindly trust the label.
Exactly. So what should investors do? How do we think about Dividend Kings in a smart way in this kind of market? Well, we got to move from just watching to really analyzing. Don't just chase the label. You got to dig deeper.
Yeah.
Look past the dividend yield and check out the fundamentals of the company. How strong are their finances? Can they adapt to change? Does their long-term plan match your goals as an investor?
So it's not about giving up on Dividend Kings. It's about being more picky.
Exactly. That's where the work comes in.
Right.
The research, the analysis, the understanding. You got to figure out which companies are truly strong and which ones might struggle.
It's like panning for gold. Got to sift through the dirt to find the nuggets.
That's a great way to put it. And the payoff can be huge. If you can find those Dividend Kings that are not only surviving, but actually getting stronger, that's a big win for long-term investors.
So we've covered a lot today. We've looked at their history, their resilience in past crashes, and what they're facing now. What are some key takeaways for our listeners as they try to make sense of this market?
I think the biggest thing to remember is that Dividend Kings aren't all the same. They're individual companies, each with its own strengths and weaknesses. The Dividend King label is a good place to start, but you have to go beyond that and do your research. Make sure the company fits your goals and how much risk you're willing to take.
So be informed, be engaged, and be involved.
Exactly. Don't just sit back and watch. Take charge of your financial future.
Great advice. And on that note, I think it's time to wrap up this deep dive. But before we go, we have one more question for you to think about. What if you could only invest in Dividend Kings for the next 10 years? What would you do?
Ooh, that's a really interesting question. It makes you think about how you see investing and how much risk you're okay with. Could you really just put all your money in these big established companies, knowing that they're all about stability and those steady payouts, instead of maybe going for some high growth stuff?
It would be a completely different way of investing compared to going after those super high growth but super risky companies.
Yeah, totally. You'd have to make some trade-offs. Sticking with just Dividend Kings might feel safe and you'd get that nice income stream.
Yeah.
But you might miss out on some of those huge gains you could get from, newer companies or those cutting-edge tech companies.
It's like choosing between a reliable car that always gets you where you need to go and a fancy sports car that might be fun but could also break down a lot.
I like that a lot.
Yeah.
And there's no right answer. It all depends on you, what you need and what you prefer. Some people really like that stability and predictability that Dividend Kings are known for. Others are okay taking on more risk if it means they might make more money. The important thing is to know yourself as an investor and pick investments that fit your goals and your risk tolerance.
So it's not about one being better than the other. It's about finding what works for you and your situation.
Exactly. That's what makes investing so cool. It's a personal journey.
Mm-hmm.
You have to understand how you feel about money, your comfort level with risk, how long you're planning to invest, and what you really want to achieve.
So knowing yourself is just as important as knowing the market.
100%.
Mm.
And how do you get to know yourself? By learning, by trying things out, by asking questions, and by always questioning what you think you know. That's why we always say do your own research. Dive deep into the companies and strategies that you're interested in. Don't just take our word for it. Go out there and figure out what makes sense to you.
That's a great point. We've shared a lot of information, but it's just the beginning. Investing is a journey. You never stop learning. You adjust, and you keep making decisions.
Well said. And we hope that this look at the Dividend Kings has given you a good foundation to work with.
Yeah.
As you keep exploring, remember, stay curious, stay informed, and most importantly, stay engaged. Investing is always changing. There's always something new to learn.
And who knows, maybe in 10 years we'll revisit this and see how those Dividend King portfolios did. Until then, happy investing, and we'll see you on our next deep dive.